Hey traders, welcome to Charts and Coffee for October 13. Great to see you all. All right, so let's make a quick pit stop at the calendar and take a look at what we have coming up, because it's a pretty interesting day where we've got the CPI already out. If you took a look at the data, what's being released today, you know that 8:30 is the CPI hot zone. Lots of volatility, lots of expectation for sudden movement. Why? Well, we're getting inflation data. And inflation data is one of the major pillars of the macro picture right now. So this is where I always recommend making sure you're keenly aware of the calendar, definitely the calendar. And then, making sure you're queuing in on these red, and this is Forex Factory, by the way. This is free. I'm not even logged in. So a great way to look at the calendar each morning. And the reason I've called them hot zones for about 20 years is because when I started trading Forex, I started using Forex Factory and other calendars. And what they would do is sort of denote the potential impact to the market with a color-coded little icon. And you can see here there were yellow and orange and red. And it's the red ones, right, that we want to focus on. So if you're ever looking at Forex Factory saying, Rog, there's a lot of data here. Two things: focus on the US, right? And then focus on the red icons. So that is what we have coming up. Of course, we've got FOMC minutes at 2 p.m. and then Brainerd speaking at 4:30 and Bowman speaking at 8. So this is definitely going to see the Asian session maybe affected by that. All right, so let's jump into the questions. As always, great to see everybody here. Good morning, good morning. Okay, so first question. Hey there, James. Good morning. How are you? I wanted to fade the NQ near the Darvis box. All right, let's go to the intraday. I wanted to, would I wait for okay, so I got you. Okay, so it is an end of day setup. So if you want to fade the Darvis on the NAS, let's zoom in just a little bit here. So two things I really like about fade, and this is actually, if you check out the Friday video, James, this is the same setup we talked about. So cool. So here's your zone. 50% is a great resistance zone. Our Darvis here, another great resistance zone. So if we were to trade higher into that level, do I need to wait? No. I'll have an alert. I'll have an alert waiting right up in this area. And then as it's moving higher into that zone, and that for me is closer to 15,000 than say for 378. So I want to look at this high here. I want to look around the major psychological level, that 50% mark. I mean, this is choppy market trading, right? This is how I trade chop. And this is definitely something that we'll be talking about tonight in the webinar. So if you haven't registered already, simpletrading.com/rotation. Yeah, this is choppy market stuff. That 50%, huge when it comes to choppy market, defining the trend. Absolutely. Absolutely. And then using the JT multi to confirm. Yeah, all of that. So this is my zone in here. And no, I don't think you have to wait unless, right, you get so the caveat to that would be what kind of candle gets us up into that level? Because if that candle that gets us higher into that resistance zone is actually, gosh, I need a haircut. I'm getting my haircut on Friday. This hair is getting ridiculous. So if we have a higher than normal session in terms of volatility, in terms of the price range, then I will absolutely wait for a pause pattern, but that's really the only reason I would. All right. And then when we have our live session for the mastery, James, feel free to bring it up. I can dive into more detail, but we're nowhere near it at the moment as far as that level. Now, I see what you're talking about, but the level you're speaking of, be careful because that might be a little too close if you're talking about the daily. If not, ask me the question in the mastery and we'll definitely dive into it. All right. Next up is good morning. Your view on anchoring the V-score in the beginning of the month, 1 year prior into the beginning of the year. So the reason I did that, and by the way, I've been using the V-score on the daily since 2008. And actually, 2008 has a lot to do with the way that I trade CHOP, the way that I use ETFs. But the reason that I am anchoring this year to the first of the year rather than 1 year back is I do not want the influence of last year's uptrend on the read of the V-score this year. I don't know that I've done that, but maybe one other time over the past 12, 13 years. So what I want to do is remember that the influence of that uptrend, I believe, was unique. I don't believe what got us in that uptrend are necessarily repeatable things. So I thought, you know what, let's leave that data, let's leave that influence off the read, and that's why. And we might continue forward with a first of the year anchor, maybe even into next year, we'll see. But I think next year I'll be able to anchor. I'll go back to that monthly realignment. But right now, first of the year, leave it there, and I think we're good. So that's what I was thinking. It really was not letting 2020 over influence the read of the V-score. So great question. All right, next up, can I speak of the way I decide if it's trend or chop? I understand it's the relationship with moving averages. Yeah, so the way that I decide it is, what I do is I take a read on the moving averages, which are these two rows down in here, 8, 13, 21, 34. And I'm also looking at the grab candles. So it's really grab plus JT multi in order to understand if we're no longer trending. Grab candles confirm that right in there. And when did we stop trending? JT multi confirm that in there. So between these two, I just get a nice color-coded read on when we're no longer in an uptrend. And then I can also see in a much more granular level when we're going from a neutral environment near term to, as you can see, look at the top row, the bearish environment. So by not looking at moving averages as just stacked 8, 13, 21, 34 and separating the 34 out, I can get a much better read. It's the difference between saying, the wind is coming out of the west versus the wind is coming out of the southwest, right? It's a little bit of a nuance. And I think that makes a huge difference. Yes, I spent quite a lot of time on Hobie cats in college. All right. So all my sailor folks know that. Just kind of that nuance makes a big difference. All right. Could I please explain the Darvis box with the yellow and the purple? Sure. I love the technical questions. And, if you're in the mastery, if you're in the Sims for Futures room on Fridays, any session that I do on Fridays, I like to do kind of an Ask Me Anything. And I think Fridays are terrific sessions where we can recap the week, prepare for the next week, and then take a lot of these kinds of tech questions. So if you are in the rooms on those days, these are perfect times to ask. And so, yes, one of the things that come up a lot, Patrick, is why the difference in color? Well, it allows us to, number one, group the box together. In other words, I know that the two yellow lines, they belong to each other, right? And then in terms of, here, I know these two belong to each other as well. So I can pair them up, you can make them better. The next thing is that yellow boxes start with a high and then the candle count. the magenta, purple, whatever you call it, color, these actually start with a low and then begin the candle count. So in other words, there is an initial pattern. There is an initial touch point that begins the process of, could this be then a Darvas pattern, a Darvas formation? And so it can either start with a low or a high, and depending on which it does, the box will color according to that. All right, so I hope that helps. All right, next up, Patel asks, what time frame do I use to enter a trade? Terrific question. So if you took the day trading class, right, if we're talking intraday, I'm going to be focused mostly on the, let's go to the TOS platform for a moment. I'm going to be focused on the 2 or 5, right? So if I'm intraday trading, those of you that took the class, you know that short-term time frames for me are defined as a 2 or 5 minute chart, and that's its own world, right? Over here to the right, I've got the daily, 1 candle per day. So if I'm entering a day trade where I don't anticipate being in the market for more than that session, which is really what day trading is, being flat at the end of the day, that's all that it denotes. It's not strategy, it's actually an exit plan. If I'm going to switch over to overnight positions, anytime that I'm going to take a trade overnight, I have found through the futures markets, Forex markets, stocks, ETFs, that the best psychology, the most tradable psychology to take advantage of the broadest opinion and reactions in the market are the most psychologically significant, is the most psychologically significant time frame. That's the daily. The daily is all about psychology. Why? Because we don't look at, gosh, what is our sentiment since noon? That's intraday. We don't look at we don't look at it and say, what was our sentiment since last week? We don't use weeklies either. We look at what's known as an end of day or daily kind of thinking. We know we're up or down in our portfolio, up or down in a trade because of where the market closed. So our psychology is really basically reset every 24 hours, every session, if you will. So I love end of day, which is basically just what? It's a daily time frame, 1 candle per day. So I don't really, early on in my career, if you would have even been with me in the early years of simpler Forex back in 2012, 13, you would have seen 5, 15, 30, 60, 120, 240, 480 daily, and sometimes even a weekly. It exhausts me to even say. And then I found that not only does that multiple time frame approach encourage traders to sometimes jump time frames to agree with the trade that they're in, which is which breaks the cardinal rule of just, knowing what your risk is and respecting risk. But if some other indicator or some other time frame says, yeah, stay in, our brains will, because oftentimes we trip into being bullish because we're long, right? Not being long because we're bullish. And think about that statement. A lot of times we are bullish because we're long, and so then we're just looking for things to agree with us. Indicators oftentimes will fill that hole, and time frames will too. So if you have a trade that's no longer working at a 30, what does the brain do? Oh, let's go look at the 60. And if the 60 is no longer in our favor, oh, let's go look at the 180 or 120 or whatever. So we'll keep justifying the position because, heck, who wants to take a loss? So I realized that not only are we trying to find the right symbols to trade, now we're jumping through another hoop of which time frame is the best. And I guess it's about 7 or 8 years now, my time frame started whittling from about 8 or 10 to about 4 to now about 3, 2, 5 daily. And I'll keep an occasional eye on the weekly to manage my portfolio. But I really trade off a 5-minute intraday and a daily. So when I'm done day trading in the morning, what we're going to talk about in the webinars, what do I do with the rest of my darn day? What do we do? What do we do with this daily? How do we take advantage of moves on it? So great question. Thank you, Patel. I appreciate that. Gilbert, yeah. So if you're looking at the calendar every morning, and that is absolutely something that I do. I mean, it's got to be part of the morning routine, right? All of us have a morning routine. And if you're ever being blindsided by volatility, It's usually because there's scheduled events that we were just either forgot or were unaware of. So, yeah, Gilbert, great point. Hi, Lisa. Good morning. XLV, setting up a Dow 123 reversal. So Dow 123s and the idea of shorting into a rip. There's a squiggly little line that separates them. And it's a single indicator that will clarify, answer the question for you, Lisa, which is a great question. How do I know when to short a rip or when we're getting ready for a move higher? And this is where the JT multi is going to help you. Absolutely. I will trust, because probability, trade after trade after trade, not that anything's 100%, but again, we're playing probabilities, not certainties. Right now, this is short the rip. Double red means short the rip. Could there be a 1, 2, 3 forming? Absolutely. I was talking more about a 1, 2, 3, not because I love this market, but somebody asked me about BABA, and I said, hey, we need to go take a look at K-Web and things like that. I want to see if there's going to be a reversal that happens. It's going to ideally accompany that transition in the JT multi. That JT multi at a glance is going to tell you, all right, this is the environment you're looking at. It's akin to a weather report in so many ways. So as far as the XLV, not yet. If we go yellow, different conversation. But Lisa, that does not mean there may not be some leaders within, right? So watch list building, this actually delves us into watch list building, right, Lisa? And everybody, if I'm starting at the sector level, I can move up and look at the implications of healthcare on the S&P or even the Dow. But I can also go more granularly, a little bit more specifically, right, to individual stocks. And there could be individual stocks that are relative outperformers within the XLV. Do I have XLV? Gosh, that's such small font. Okay, I couldn't see that. I couldn't see if I've got that multi open. So let me open that for you, because this is such a great, ETFs, these pre-curated lists of stocks that we know are in play because of the dominance psychologically, from a standpoint of flow, of passive investing, which is just another way of saying investors are focusing on ETFs now more than ever. And that means that the ETFs have an influence over the stocks now more than ever. And that influence just continues to climb. So if I look at XLV, I can ask myself, is there a relative outperformer here? So do you see how the sector can lead to the watch list? So yes, interest in maybe a 1, 2, 3 in healthcare, but then you ask yourself, well, is there a stock that could be a relative outperformer within the double red XLV? And yeah, there could be. I would probably focus on. I would leave Merck alone. I don't like this kind of gap, and some of the news here. AbbVie, Thermo, United Health. Those are tempting places to look. Absolutely. But for the most part, I want to be a short seller in the XLV and in most of the stocks. But if you're looking for that reversal, start building your watch list differently, right? We should have there's a couple ways to look at watch lists. You can look at, think about it this way. Most people just have one watch list. I'm watching these stocks. I would say you separate them into a long and short watch list, which is something I do with this process using the ETFs. And then in this environment now, I really want to have a watch list that is markets that are moving higher, markets that are moving lower, and markets that are in chop, because now I am distinguishing between 3 different strategies. Downtrends and uptrends are similar, but downtrends behave a little bit differently than uptrends. And chop, as far as entries and exits, that's going to be an emphasis too, come tonight and Saturday's class. Exits are also different in chop than they would be in trends. So terrific question. I appreciate all the questions. Thank you as always for being here for Charts and Coffee. I'll see you all tonight at the webinar, 8 p.m. You can register over at simplertrading.com/rotation. And now it's time to head on over into the mastery. We're doing a little bit of day trading with you all. So again, Really, really great questions. I'll see you tomorrow. Be good to each other. Oh, and heads up, 2 p.m. FOMC. Remember that. Talking about getting blindsided by different data points. All right. Take care.